Hey traders, it's John Fortune here of this week's Weekly Forex Forecast. We're looking at the DXY in the 4-hour chart, and we're starting off with the dollar index as we usually do. Now we've zoomed out a little bit here just to accommodate the wave count that we discussed in last week's video. And we discussed the fact that the DXY is in an overall downtrend, and it does look like the 88.46 is the most likely destination in the bigger picture. However, we noted that although the market doesn't always move on wave counts, that it does look like a wave count is developing in the DXY to the downside. And we highlighted the fact that there could be some dollar strength last week on the basis that it looks like we're in a fourth wave correction in the DXY, and we did actually have a nice correction right into the key of resistance we highlighted last week, which was at the 90.68. You can see the market actually finished at the 90.78, so 10 pips just above the key of resistance we highlighted last week. Going into this week, therefore, we can see we have had a near-term reversal. This is not surprising if we are correct into the upside in the DXY. So we would favor long positions in the DXY. That would be, for example, euro-dollar to the downside this week. But just bear in mind that this is not an outright bullish bias on the DXY because it is a corrective wave by the looks of it. So we do go into next week with a bullish to neutral bias on the DXY because it is correcting to the upside, but it is still just a correction. It is not moving to the upside in line with the bigger picture. And so that counter trend move gives us a bullish to neutral bias on this asset, which just simply means that I would be interested in dollar strong positions next week in the markets, but I wouldn't be putting too much capital into them in case the dollar index does start to reverse to the downside for a final fifth wave. And I would also be interested in looking outside of the dollar pairs, because when the dollar itself is correcting, it is a good idea to look out to some of the cross pairs instead as well for opportunities. So to summarize, the dollar index is gaining some strength, and this does look to be the fourth wave correction we discussed last week. I would therefore be interested this week in some dollar strength positions, but I won't be going too hard on dollar strength positions because of that potential fifth wave to the downside at some point. And I would also be interested in some of the cross pairs outside of the dollar pairs, which we're going to be looking at in this video as well. Next we have crude oil. Now last week we highlighted the fact we were looking for a rally into the 53.84, and we turned at this key of resistance. We took out this target almost to the pip. The high of the week was at 53.86. And now we've started to correct. This is simply being viewed as another opportunity to look for long positions in this market. And we're going to be looking for bullish reversal patterns in crude oil up towards the next key of resistance, the upside, and the target set at the 54.40. Next we have euro dollar. Now last week we had a reversal week to the downside in euro dollar, and that was as we had that strength coming into the DXY for this what looks like a fourth wave correction. I am interested next week in further declines in this market. I like the way we're seeing some momentum coming into the downside in the 4-hour chart. So very simply put, any correction in this market to next week would be viewed as an opportunity to look for bearish reversals in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set, the 1.2012. Next we have pound dollar. Last week we were looking for a rally into the 1.3711, and we missed this by 1 pip. We rallied into the 1.3710. So we did have a nice move to the upside as we were looking at last week. However, we've started to sell off as we're getting that strength in the DXY. The problem with the pound is you can see we have pound strength because it's still structured to the upside, but we're starting to lack momentum. We're really struggling above the previous highs here. So personally speaking, I wouldn't be too interested in pound dollar to the upside going into this week because of the strength in the DXY. In order to short this, it would have to be below the 1.34510. So this may be just a chart that I leave next week altogether. Just bear in mind that if you wanted to, you could also potentially play a synthetic hedge play with pound dollar to the upside, euro dollar to the downside. And again, as always, we've put a link in the description below to the free GMT trading course where we discuss synthetic hedging if you're interested in that. So pound dollar is still structured to the upside. This is opposite really to potential DXY strength next week. So I would personally probably leave this chart next week. Next we have US dollar Japanese yen. We highlighted last week that this looks to be setting up for an inverse head and shoulders. We barely moved last week, and this is because the strength we're seeing in the DXY is corrective strength. We're not really seeing any substantial strength. So a number of markets had inside weeks, so they just didn't really move. US dollar yen was one of them. We're still looking for any correction back towards the 102.80 as an opportunity to look for bullish reversals in this market. First of all, up to the previous high at the 104.40 as a conservative target, and then up to the next key of resistance, the upside and the target set at the 105.02. Next we have Aussie dollar. Now Aussie dollar is still structured to the upside, showing Aussie dollar strength against the US dollar, and so I would only be interested in long positions in this market. We've pulled back to the 0.7695, but because the DXY is now currently structured to the upside after last week, this would be one that I would just leave next week because it's likely to be corrective if we get more dollar strength, or if you wanted to put this into a synthetic hedging play against, say, euro dollar, you could do. So technically I would still only be interested in long positions from where we sit at the 0.7695 up towards the previous high and the next key of resistance, the upside at 0.7824. But just bear in mind, this is counter to the current strength we're seeing for this potential corrective fourth wave in the DXY. So you could just leave this chart altogether if you only want to trade dollar strength trades next week, or you could use it as part of a synthetic hedge play against a pair like euro US dollar. It's entirely up to you. Next we have New Zealand dollar. Now New Zealand dollar is technically structured to the downside, so if you did want to trade dollar strength next week, this would be a good one to trade. We're currently coming close to the next key of support, so we'd like to see a pullback in this market towards the 0.7257. It doesn't have to come all the way back, but any correction is going to be viewed as an opportunity to look for bearish reversals down towards the next key of support to the downside, and the target set the 0.7114. And ultimately, if we can get a break through here down towards the next key of support to the downside and target 2 at the 0.7052. Next we have US dollar Swiss franc. Now US dollar Swiss franc structured to the upside this week in line with what we're seeing in the DXY. It does look like we may have an inverse head and shoulders forming in this market, so any correction towards the 0.87870 is going to be viewed next week as an opportunity by myself to look for potential bullish reversals in this market. And I'm going to be looking up towards the next key of resistance, the upside and the target set at 0.8980. Next we have US dollar CAD. Now US dollar CAD is structured to the downside. This is showing weakness in the DXY against the Canadian dollar, and it's because we're catching a bid in the Canadian dollar because of the rally in crude oil. I would only technically be interested in shorting this market because it's structured to the downside. I don't want to try and pick bottoms. I'm not interested in vanity trades. So I'd only be interested in shorting this, which is opposite to the strength we're seeing in the DXY. So this is another market that you cannot just leave altogether if you want to trade dollar strength next week or use it as a synthetic hedge play. But technically, this is the area I would start to look if you are looking to short this for reversals in this market. And I'd be looking down towards the next key of support to the downside and the target set at the 1.2578, and ultimately any breakthrough here I'd be looking down towards the next key of support to the downside and target 2 at the 1.2437. Next we have gold. Now gold is structured to the downside, so I'm only interested in shorting this market. We did have a down week last week, but we didn't really go anywhere. We had kind of a lack of volatility in this market last week. So we're still looking down towards the 1801.02. Anybody not already short in this market, what I'd like to see for any new positions is a correction, a pullback towards the 194379. It's not going to come all the way back to here. That's unlikely if it's going to head lower. But any correction is going to provide good risk to reward opportunities to look for bearish reversals in this market down towards the next key of support to the downside and the target set at the 1801.02. This would also somewhat be in line with the dollar strength and DXY, so it's something I'm going to be keeping an eye on next week. This is a market I will be watching. Next we have Euro Yen. Now Euro Yen is structured to the downside, so I'm only interested in short positions in this market. We do have nice momentum, so lower lows is probably on the cards in this market next week. Any correction back towards the 127.22, but unlikely to come all the way back there. Any correction in this area is going to be viewed as an opportunity next week to start to look for bearish reversals in this market down towards the next target to the downside at the 125.15. And if we can get a break through here down towards the second target to the downside in this market at the 124.59. Next we have franc yen. Now franc yen looks like it's forming an A, B and a C, and the next target to the downside is the 116.11. So this is something I'd be looking to be achieved next week. Any correction in this market back towards the 117.14 would be viewed as an opportunity to look for bearish reversals in this market down towards the next key of support to the downside and the target set at the 116.11. Next we have pound yen. Now we had a rally to the upside in this market and we stopped just shy of the target at the 142.280. This is simply viewed as a correction to look for another opportunity to go long in this market. Any deeper correction is going to be viewed as an opportunity to look for bullish reversals, and we're going to be looking up towards the next key of resistance, the upside and the target set at the 142.28. Next we have Aussie yen. Now Aussie yen was another market that pretty much did nothing last week, had an inside week, and it's just correcting. So very simply put, it is still structured to the upside. We're looking for the 80.97. So this correction is simply going to be viewed next week as an opportunity to look once again for bullish reversals in this market. We're going to be looking up towards the next key of resistance, the upside and the target set at the 80.97. Next we have CAD yen. Now CAD yen is still structured to the upside, so I'm only interested in long positions in this market. This sell-off and any deeper correction is simply going to be viewed as an opportunity to look for bullish reversals in this market. I'm going to be looking first of all up to the previous high here at the 82.20, and then on up towards the next key of resistance, the upside and the target set at the 82.64. Next we have New Zealand yen. Now New Zealand yen is structured to the upside, so I'm only interested in long positions. We've pulled back to the 74.16 and we're still above the 73.79, so I am interested in potential bullish reversals. If we just come straight down and take out the 73.79, then I'll be looking for potential short positions. But as it stands, we're above the 73.79, so what I'm interested in is any bullish reversals from this area, and it doesn't mean buying it right here, it means looking for the market to start to reverse, to break out to the upside. Then I would be interested in looking for long positions in this market, first of all up towards the 75.60, which is the previous high, and onto the next key of resistance, the upside and the target set, the 75.94. So just bear in mind, we're not looking to just buy and sell these levels. We do want to see reversals in the direction that these markets are structured when we're going long or short in these assets. Next we have Euro franc. Now Euro franc is structured to the downside, and it does look like we could come down to the 1.0737, so certainly one to keep an eye on for next week. What I'd like to see though is we're down near the lows, so any correction in this market next week is going to be viewed as an opportunity to look for bearish reversal patterns and breakouts to the downside, down towards the next key of support to the downside and the target set for next week at 1.0737. Next we have Euro New Zealand. Now last week we highlighted the 1.68410, and this market didn't really move much last week, but it did take out the target and there was a nice trade in here from last week. Very simply put, we're still structured to the downside, and as long as we're below the 1.69820, I'm only interested in shorting this. We've already had a pullback to the 1.6966, so any bearish reversal in this area will be viewed as another opportunity to look for short positions in this market, down towards the next key of support to the downside and the target set next week at the 1.6727. And just bear in mind, if we do get more dollar strength next week, the euro pairs to the downside would be something to keep an eye on next week. Next we have EurUsd. Now EurUsd was a nice move to the downside amongst a number of markets which didn't really move. We did take out the target to the 1.57060, and I did short this last week. This was a decent trade. It does look like we're going to have lower lows again this week, so this will be a market I'll be keeping my eye on to the downside this week. We've already started to pull back from the 1.5588, which is great because it gives us good risk to reward opportunity down to this target, and any deeper correction in this market is simply going to be viewed once again as another opportunity to look for bearish reversals down towards the next key of support to the downside and the target set at the 1.5588. Next we have Euro Pound. Now last week Euro Pound was one of the best performing markets. We came down, took out the target at the 0.8867, and this is a market that I highlighted on Twitter but also in the YouTube community tab here on this channel, and I think Euro Pound could have a lot further to go this year. It's certainly something I'll be interested in keeping my eye on once again going into this week. So going into this week, having taken out the target to the pip last week to the downside, I am interested in short positions in this market once again. I'd like to see a correction because we're down near the lows, so any correction back towards the 0.9053 would be viewed as an opportunity next week to start to look for bearish reversals once again, and I would be looking down towards the next key of support to the downside and the target set for this week, the 0.8815. Next we have Euro CAD. Now Euro CAD came and took out the target again almost to the pip at the 1.5355 last week, so I would be interested in short positions once again. You can see Euro weak pairs outperformed last week, and I would not be surprised to see this being the case again this week if we're going to get further advances to the upside in the DXY, even if it is just a fourth wave correction. So very simply put, we're starting to correct, and any further correction in this market is going to be viewed as an opportunity to look for short positions once again in this market this week, down towards the next key of support to the downside and the target set at the 1.5314. And the fact that we are still trending to the upside in crude oil suggests to me that we are going to make lower lows in this market next week, so certainly one to keep an eye on. Next we have pound franc. Now pound franc is structured to the upside, so I'd only be interested in long positions in this market. Just remember, pound franc to the upside is pretty much the same trade as euro pound to the downside, and I think I prefer euro pound out of the two, but I would not be surprised to see pound franc making higher highs. And the target we have set here is the 1.2199, so any deeper correction in this market for anybody looking to trade it would be viewed as an opportunity to look for bullish reversals, and we'd be looking up towards the next key of resistance, the upside, and the target set at the 1.2199. Next we have pound Aussie. Now pound Aussie is structured to the downside. It does look like we're starting to correct already, so I would be looking for anybody looking to trade this market, bearish reversal patterns, and I'd be looking down towards the next key of support to the downside and the target set at the 1.7399. Now, is this a market I'll be interested in trading next week? Well, we're starting to lack a bit of momentum. I think there are better markets out there, but if you are looking to trade this pair, that is what I would be looking for going into next week. Next we have pound CAD. Now pound CAD is structured to the upside, and this is a market that I would only be interested in taking long positions in if I am trading this next week. We're starting to correct, so any deeper correction would be viewed as an opportunity to start to look for bullish setups in this market. First of all, back to the previous high at the 1.7480 and on towards the next key of resistance, the upside and the target set at the 1.7510. So if you are looking at trading this market next week, that is what I'd be technically looking at in this market. Next we have pound New Zealand. Now, as already discussed, I do like the dollar strong positions, euro weak positions going into next week, but if you are looking to trade this to the upside is where I'd be looking to trade this market. It is structured to the upside. I'd like to see a correction first for anybody looking to trade this market towards the 1.8730, and that would be the opportunity to start to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 1.9147. Next we have Aussie franc. Now last week we highlighted the 0.6901 and we did take out this target, and that was pretty much the high for the week. Very simply put, going into this week I am only interested in long positions once again in this market. Any correction back towards the 0.67240 would be viewed as an opportunity to look for bullish reversals in this market, and I'd be looking up towards the next key of resistance, the upside and the target set at the 0.6954. Next we have Aussie CAD. Now Aussie CAD is selling off, and it is structured to the downside going into next week as oil catches a bid and it has a positive influence on the Canadian dollar. I would only be interested in short positions for anybody looking to trade this market next week. Any correction back towards the 0.98590 would be viewed as an opportunity in this market to look for a bearish reversal to the downside, and I'll be looking down towards the next key of support to the downside and the target set at the 0.9768. Next we have Aussie New Zealand. Now last week we were looking for a rally into the 1.07590. We did take out this target and we actually moved past it a little bit last week. So very simply put, going into next week, I am interested in looking for further advances to the upside in this market. And this is a market I'll be keeping my eye on. It does look like we're going to have further advances to the upside. So any correction back towards the 1.06610 will be what provides the opportunity to look for bullish reversals in this market. And I'm going to be looking up towards the next key of resistance, the upside and the target set at the 1.0829. Next we have New Zealand CAD. Now New Zealand CAD is structured to the downside, so for anybody looking to trade this market, I would only be interested in short positions next week in this market. We're very close to the 0.9067, so in order to get good risk to reward in this market, what I would like to see is a correction back towards the 0.92130, and this would provide the opportunity next week to start to look for bearish reversals in this market. And I'll be looking down towards the next key of support to the downside and the target set at the 0.9067, and ultimately if we can get to break through there down towards the next key of support to the downside and target 2 at the 0.9032. Next we have New Zealand franc. Now last week we were looking for a pullback into the 0.63410, and this is exactly what happened last week. Very simply put, this is now a great place to start to look for bullish reversals in this market, and any bullish reversal pattern in this area is going to be viewed next week as an opportunity to look for long positions up towards the next key of resistance, the upside and the target set 0.6462. And last but not least we have CAD franc. Now last week we highlighted the 0.70080 to look for a trade into this area, and we did take out this target last week. Very simply put, going into this week I would not be surprised to see this make higher highs as oil catches a bid and we see the positive influence that has on the Canadian dollar. So any correction, we're starting to pull back, but any deeper correction is simply going to be viewed next week as another opportunity to look for long positions in this market up towards the next key area resistance, the upside and the target set, at the 0.7049. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a nice weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.